Hi there, welcome to Neppy Invests. Today's quarterly cash flow report video is on a company I thought wouldn't be doing one this quarter, and that is Uniti Group. And they do have a large market cap, 700 million or so, and they are cash flow positive. They've been cash flow positive for a while. They are profitable. I just thought they wouldn't be doing one. I thought maybe this last quarter, July 2020, was their last one, but no, they issued one or released one yesterday or Monday, the 19th of October, and I thought it'd be just good to go through it because it is a company I have owned in the past. I did sell about a year ago for about $1.50. So if you don't know what Uniti Group are, they are just an ISP or internet service provider, and they use fiber and wireless technologies. And they are fairly acquisition hungry, which is not always a bad thing, but it can be fraught with danger because if you don't get those synergies, you know, those buzzwords, synergies, hello, Slater and Gordon, sometimes acquisitions can be value destroying for shareholders. So remains to be seen how those acquisitions go for Uniti. And they do have an acquisition up in the air at the moment with another ASX company called Opticom. Opticom haven't been in the ASX for long, but they are a growing company. So a bit of uncertainty, I think, around that acquisition. So let's get into their quarterly cash flow report. So in my previous videos, all I've been showing you is the operating cash flow, or the cash flows from operating activities. In this video, I'm going to go through the whole cash flow report because there's a lot of activity in all the different sections. So the one I show every single video, the one I do show, the one I'll always look at is cash flows from operating activities. How are operations going in the business? You can see receipts from customers, $20.4 million, not too shabby. But the big, not too shabby one is right at the bottom there. So net cash from operating activities is positive 10.5 million. So highly cash flow generative, this business, and that's good. In fact, when you take that into account and the market cap, it's not that grossly overvalued at all. So, especially with the potential good acquisition coming up. So, one I yet to show you is a quarterly cash flow report has three sections. It has the one I always show, the operating cash flow, and the other two sections are the investing cash flow, which takes into account payments they make for businesses, property, plant, and equipment, which is capital expenditure, investments, and that sort of thing. And the other one is financing cash flow, which is stuff like capital raisings, dividend payments, borrowings, that sort of thing. So in this section, investing cash flow, they did spend $32.8 million in an acquisition or business and $3.6 million in capital expenditure. So that totals about $36.98 million they spent in investing activities. I would love if companies broke down the capital expenditure, the property, plant, equipment, into growth capital expenditure and maintenance capital expenditure. I think the difference between those two is quite important because if they're spending more on growth initiatives instead of maintenance initiatives, that's actually quite a little bit different than if they're spending all their capital expenditure on maintenance. But I'm just ranting at the moment. And the final section is the financing cash flow. So you'll see what they do with capital raisings here. So we see a big number here, $118.4 million. So that's a capital raising they did. I think they might have done that in lieu of the impending acquisition of Opticom. And some of the other numbers there, and all the other things, not much to do with borrowings, or there are no dividends paid. So they raised $114.857 million in financing activities. And then section 4 is you just add all those up. You start with the cash at the start of the period, which was $189 million, add all those things up, and at the end of the period, they finished with $277.5 million in the piggy bank. Not literally the piggy bank. I'm not sure what, actually they do say what they've got it in, like cash at the bank and other stuff, or bonds or stuff. I would like to have that amount of cash in my piggy bank, but alas, no. So if you're willing to give me $277.5 million, Uniti Group, I will be happy to take that money off your hands. But if you've been following my videos, the one thing I really like to look at is seeing how they're going with cash receipts and make sure there's a good uptrend. With a company that's acquisition hungry, it's tricky because you don't know if the increasing in cash receipts is because of organic growth or acquisition growth or inorganic growth. They did give us a clue here that the growth in cash receipts over the past quarter is all organic because there was no acquisitions that led to cash receipts growth here. So we do know that $1.3 million difference between previous quarter and this quarter is all organic. So there's one little clue they did give us in some of the notes of the cash flow report. Some of the other things they did give us, free cash flow was $6.9 million. I've already mentioned those next two things. And they have a 19.5 interest in Opticom OPC, which is that ASX company they're hoping to acquire. So a lot of things are happening with this acquisition. They put in the bid a few months ago. Opticom management said to shareholders, you should accept this bid unless there's a competing bid. And lo and behold, a competing bid came in from a private equity group, I believe, and then straight away Uniti Group put in a competing bid against that competing bid. And again, Opticom said to shareholders, this is the superior bid, so you should accept it. And at the moment, I don't think there is a competing bid the private equity company has put in. So it looks like this superior bid is the winner so far. But the market is a little bit hesitant, and you'll see that with the chart here. So share price has not done much over the past year, so you could say there's a little bit weakness here, maybe a little bit better value, but the one thing I'll do is if I was thinking of buying Uniti Group, I'd wait for it to go into an uptrend. Right now, it's getting to a price of about $1.20. If it falls below $1.20, I'd be quite bearish for some reason. No, for some reason, it's because it's gone below that low in September, which was about $1.20. If it falls below that, I'd be quite bearish, and I think some other people will be bearish too. But no reason that's going to happen. I think a lot of this bearishness is just uncertainty with the acquisition of Opticom. If they do acquire, Opticom becomes official, we're going to have a much bigger company on our hands here. And Opticom is growing, Uniti is growing too. So a good growing company. There'll probably be some synergies there that they can, what they call it, EPS accretive, that sort of thing. So those sort of things might lead to a better company overall in the future. So that's all I've got for Uniti Group. Hope you've enjoyed this video. If you do have any questions, leave it in the comments. If you are seeking professional advice, financial professional advice, make sure you seek out a professional. I'm not a professional. I'm just here to entertain you. Have I entertained you? As what's his name, Maximus says, have I entertained you? But yeah, seek out professional advice if you do need it. And that's all I really got to say. Maybe one day I'll become a professional. Who knows? And then you can seek out my advice. But otherwise, have a good day. I might do another video because AVA Group is going off the charts. But that's all. See you later.